Before I touch base on these stocks that I promise you are going to be the best performers in this 2020 recession, I think it is important to touch base on the other half of the economy not doing so well, and I am by no means an exception to this, being self-employed in the entertainment industry, losing thousands of dollars. However, I'm always a glass half full kind of a dude, and I'm fairly malleable, and I want to touch base on these people that are standing in this line that are desperate, trying to get unemployment and government benefits, and by all means, if you can take advantage, but this is not the time to play the woe is me card and be a negative Nancy, especially if you got kids and families to feed. You need to get out there, you need to hustle and get some jobs, and you got to keep sanitized and clean, obviously, but some things you can easily start up, guys. Get into Uber Eats, start a YouTube channel, maybe get into the online business realm. There's just a lot of things you could be doing instead of sitting down watching TV, and I am going out and taking advantage in every way possible, including filling up some jerry cans of gas. I went out to the gas station the other day, filled up for like 76 cents Canadian a liter, and I plan on holding on to that until things come back, because if gas pops up to 20 or 30%, I'm going to be saving a lot on my next tank fill up. And in light of all of this, guys, I want to get into these stocks that I promise you are going to do exceptionally well, even though their stock price is down right now, and you got some extra capital, you might want to pick some of these up. So ladies, gentlemen, I look so forward to breaking this down for you, so let's hop right into this.
Drop it.
Welcome back, my passive income investors. The first stock we're going to be taking a look at is one of my favorite date night stocks, because me and my girlfriend used to go to Costco all the time to get the $1.50 hot dog and drink. You get free samples, you can cruise around. But Costco, however, has one of the best business models on the planet when it comes to food and just retail in general, because you have to get a Costco card membership, and they do this to try and wean out anyone that's coming in for individual items. They made their entire business model around spending a lot of money and building in bulk, and this is a company we know, we've seen it in the news, people lining up down the door to basically get into Costco now that they're only letting in a handful of people at a time. This is one that's just going to do unbelievable through this. And taking a look at their dividend, though these stocks might not pay high yields, considering the dividend yield is under 8% still, these are companies that have increased them substantially over time, going back into the history of Costco all the way back to say 2011, where the stock was trading at 24 cents a quarter, all the way to today where we're getting 65 cents, which is a substantial increase by almost 3 times. So if you got 1%, well, a decade later, you're getting 3% now, plus the incredible growth rate that a company like Costco has the ability to offer. Leading us into numero dos, Colgate and Palmolive. We all have to brush our teeth and use some of these products from these companies, and Colgate's no exception to this, being one of the best performing stocks of all time, currently with a dividend yield of 2.84%. And by the way, these are all dividend aristocrats, which just means they've been paying and increasing dividends for like 50 years. And Colgate here, taking a look at the history all the way to 2011, it looks like they've decreased their dividend, but it wouldn't surprise me if that is primarily due to a stock split, which would make a little bit more sense. But going from 2013 at 34 cents a quarter to today at 44 cents, we're not talking about the fastest increases, but you're also getting a much heftier dividend yield starting it all off. Leading into a stock that I actually used to own that I do not own anymore, and I wish I did before it took off going back into earlier 2019. We're talking about Procter & Gamble. This company supplies a large amount of the hotel chain, so they might be feeling a bigger impact, but on the individual level, we're all out there loading up on toilet paper and many of the products that Procter & Gamble offer, including razors. The list is really endless, guys, and this dividend yield currently sits at 2.91%. And taking a look at the dividend history overall, going all the way back again to 2011, from a 0.52 quarterly earning to 0.74. Again, nothing huge, but you're also starting off with almost a 3% yield. Now, it's quite apparent that these companies perform exceptionally well because they are the toilet paper companies, which clearly is the next gold of this 2020 recession. Everyone thought gold and Bitcoin were going to be the best survivors, but clearly it was toilet paper. Now, moving into the medical space, this is one that I already personally own and one that I recommend considering it. It sits in the S&P top 10 largest companies in the world. We're talking about Johnson & Johnson. I was very fortunate back in the day to actually work for one of their departments, and by I mean work work perform. I got hired in privately to entertain them in between meetings. Very interesting stuff. Now, Johnson & Johnson primarily makes a large amount of their capital off the medical sector of their portfolio because they're supplying medical parts, and obviously they're a big drug pharmaceutical company, and these companies obviously perform better not only in recessionary periods, but in times like this when health matters more than anything. So even though the stock is down 5%, I promise you its balance sheet is going to be growing through all of this. And on top of that, guys, I think it's dropping because a lot of these companies are held in index funds, and a lot of people have been scared and pulling excessive amounts of money out of the indexes. And unfortunately, when they do that, not only are they selling the bad non-recession proof companies, they are also selling out of these phenomenal companies that honestly, if you can take some advantage of, I know the dividend yield's not high, starting at 3%, and with the dividend history going all the way back to 2011 as well, from 57 cents to today where it's at 95 cents a quarter. These, you just got to have them. I know a lot of us are out there looking at things like airlines, the cruise lines, heck, maybe even REIT, something I really enjoy, but you need to have these to some extent in your portfolio because they're just the ride or die lifetime ability holding stocks that'll just be around forever. And honestly, if you have a long enough time horizon, go 20 years from now, you're going to be doing so good on a company like this, guys. So make sure you're not just a high yield chaser and you're also chasing those world renowned balance sheets, leading me into another stock that I personally own that you might not be the biggest fan of, but I'm telling you right now, Altria Group, one of the largest tobacco producers in the world, is going to also do well. And this is going to be a little bit confusing because a lot of you are out there saying, yeah, but people are telling you not to smoke. Maybe you watch some of those people that had the coronavirus that are releasing videos saying, look, if you smoke, you're going to need to stop. But at the same reality, my brother was over the other day, and you know what he said? So long as I can get my cigarettes. And I've heard that already from quite a few people. And I can promise you that in every recessionary period when there's high stress, a lot of people at home, people want to take their breaks. And if they ain't going to Starbucks and they're smokers, I can tell you they're going to be loading the boat on their tobacco. And you can see, guys, that through every recession that we've ever faced, Altria Group actually had a decent balance sheet. Looking at the '08 crisis, even though the stock dropped 34%, it came back without a hitch. I mean, 34% drop in one of the worst crashes in financial history, and it did just fine. Going back to the early 90s here, heading into the dot-com bubble, when tobacco was getting real heated for obviously the problems that it causes with cancer and everything. And I'm not here to debate those factors around it. I'm just here to talk about how the stock physically performs in these times. And considering this company has already taken a massive hit from all-time highs, if I can get this to line up, being down 54% with almost a 10% yield, you got to ask yourself, is that yield going to be safe? Well, let's take a look. Going all the way back to basically 2012, this company has increased its dividend from 41 cents a quarter to 84 cents. So it's already doubled its dividend in the last decade. And considering the yield is already so high, could you imagine going from, say, an 8% yield on this stock to a 16 or 20% yield over a decade? That is a reality that is still very likely to exist, considering their bottom line revenues never really change. But something that I'm expecting to see is in fearful times, people don't only load up on toilet paper, but here in Canada, Ontario, the LCBOs, the liquor stores are all still open. And I promise you, people aren't going to be doing much more than drinking at home and buying their cigarettes if they already indulge in those parts of their life. Now, that's probably the highest yield I'm going to show you because these next few stocks I'm going to show you do not pay dividends at all. But I promise you, if you want some growth in your portfolio and you don't know where to look, these are the stocks you're going to want to pay attention to. The first thing I'm going to show you is the social media usage over history, guys. Going from 2006 to 2018, we can kind of see how, obviously the internet, social media has been progressively taking over the entire world and is going to continue to, whether you like it or not. And if there's something that is going on right now that I've had a big argument and debate about is how well is Google and Facebook going to perform through all of this. And if I can give you a few tidbits of advice, considering everybody is sitting at home, and I don't know where the statistics are, but I heard on the news that there's been a spike in social media usage by 30%. If there's one thing that is not going to change, it's people advertising on these platforms. And the big debate that I got in with some people was, well, if there's not a lot of people out there making money selling products, they're going to see a hit on their bottom line earnings. But personally, being employed by, say, somebody like Google and somebody that uses Facebook ads, I've actually seen an increase in my ad revenue. And on top of that, if we hop onto Facebook right now, guys, and I scroll through my personal feed, the first thing I see is a Wix sponsored ad. Somehow I feel like the companies that are going to be able to survive and do well through this are still going to be paying for ads on these platforms, especially considering everybody's eyeballs are on them right now. And if everyone's eyeballs on them, someone's going to see that as an opportunity. I'm not 100% sure how the bottom line performance is going to be affected, but at the same time with these companies, guys, the way the world's headed and the fact that this is just what everybody's doing at these current recessionary period with this virus going on, I just can't foresee these stocks doing bad. And considering they've already taken a massive haircut, I feel like they've been priced into this current market. And we obviously won't know until first quarterly earnings come in, but the fact that we're heading into an election cycle with people like Bloomberg, that we're spending massive amounts of capital, like tens of millions of dollars on the Facebook and Google platform, including Bernie Sanders and a lot of these other political uprunners, I just can't foresee this first quarter being bad for these guys. And in light of all of this, I would love to know what you guys think about what we've talked about today. Are you in the part of the economy being hit the hardest like myself? I'm going to be one of those people that if the government is going to offer benefits, I'm going to take advantage. But unfortunately, being self-employed, I can't take advantage of unemployment. So I am probably one of the people you are talking to right now that are actually feeling the fullest extent. I can't get unemployment. I'm losing a ton of work. But like I said, I'm always a glass half full kind of dude. I'm going to take advantage in any way I can. I'm going to keep making YouTube videos for you guys. So thanks so much. Consider slapping a like and subscribing because you're allowing me to be able to eat. But stay cool, stay awesome, and I look forward to chatting to you guys tomorrow.